Well, hi there folks, it's Matt Hayson here looking at this week's property market. Plenty going down as always, starting with the RBA, who have left the cash rate on hold during the week. Now, most market economists did expect this would be the case. However, the rhetoric coming from the RBA is still holding this tightening bias, at least for now. Now, there's going to be a lot of retail data that comes out at the end of Jan, and that could very well be the next trigger point and their decision around when the RBA do meet, what they will do with rates moving into 2024. Now, in some other good news for the property market, lending commitments are actually up at the end of October. They are almost 5% higher than the corresponding period in 2022. But at that point in time, many people thought that the rate lifting cycle had come to an end. So it could be a false dawn in terms of buyer confidence. So we'll have to see when this next tranche of data does come out. Now, the cheap fixed rate mortgage cliff is almost over, with most of these loans almost expiring. So that's good news. Most of Australians have found their way to navigate through that. However, you can see that this house debt servicing levels are still at record highs. So as a result of that, we can see that pain from these 13 rate increases is certainly playing out in how people are managing their mortgages. And as a result of that, and also inflation and the cost of living, we can see here that consumer confidence is almost still aligned with where it was sitting at the beginning of the pandemic, when many people thought that the world as we knew it was coming to an end. So that's not the best news as we turn a corner into Christmas in a couple of weeks. Now, as I've been reporting over the last couple of weeks, price growth here in Sydney has been falling and almost now is sitting at a neutral spot. Now, that's coincided also with a declining auction clearance rate, as you can see here. And for the fourth week in a row, the final clearance rate in Sydney was sub 50%. Now, despite all of this, property price growth in Sydney is actually up this year. On December 3, according to the latest CoreLogic data, it was up by 12%. Now, this comes despite all of our major institutions at the beginning of the year forecasting the property values in Sydney would be down by an average of 8%. So that's another car crash in terms of forecasting from our major institutions. I don't know why we do it to ourselves, but let's look at some forecasting moving into next year, starting with Domain, who have suggested that house price growth could be up by 6 to 8% in 2024. However, most of these other experts are suggesting it's going to be a choppy ride for property in 2024, with very modest, if not slim line growth there. And Louis Christopher from SQM Research actually expecting that there could be price declines moving into next year. So they're all over the map, and of course what's going to happen with the interest rates is going to have a major impact on what happens with property prices next year. Now, despite all of that unfolding, there's still some very strong sales occurring in the market, and it's not every week we get to report on a new suburb record has been set for this magnificent home at 18 Dudley Street in Haberfield, which obliterated the previous record, and it was a magnificent family home as well, and we congratulate our vendor and the purchasers for securing that property. But also over in Lewisham, we secured this sale for north of $5 million. Again, a very punchy result for that suburb, and this fantastic, very competitive auction at 6 Harris Street in Balmain. That's a good sign for the market when you're seeing that level of competition at auction. And then an off-market sale here in Hurlstone Park, north of $3 million, which again, very strong outcome for that particular suburb. So that's how this market's going to finish this year. A lot of confidence there, and a lot of sellers have been navigating their campaign through in order to find the right buyer and secure a very strong result. So we're going to have some confidence moving into next year, where we do suspect there's going to be a good level of new listings coming onto the market, maybe mid-Jan, late Jan, which is a good sign if you're a buyer. So that's where this year finishes. Many people thought the property prices would go down this year. They ended up going up. What's in store for next year will remain to be seen, but it's been a pleasure reporting on all the facts and the data to help you navigate your way through the property cycle. So folks, on behalf of myself and our entire team here at CH, I wish you a very safe, very joyous Christmas and a ripper of a summer holiday in Australia. And I'll be back next year. Look forward to seeing you. Take care. I'll catch you then.